All right. In their most recently completed quarter, ChargePoint said that revenue came in for the first quarter at 98 million. This is Q1 fiscal year 2026 for ChargePoint. Revenue came in at 98 million, right within our guidance range. Non-GAAP gross margin continues to increase quarter over quarter, reaching a new high of 31%, with software as a subscription gross margin coming in at 60%. First off, let me highlight something that management teams like to do. Revenue came in at 98 million. You notice they didn't talk about whether or not this was higher or lower from the same quarter last year. Typically, when revenue is higher than where it was in the same quarter last year, the management team will tell you that. They will say right up front, revenue increased by so and so percentage from the same quarter last year. I was just reading the conference call transcript from CoreWeave, the AI company, and their revenue increased by over 200%. And so management was advertising that fact all over their earnings call, right? But what do you notice missing from ChargePoint's earnings call? No discussion about whether this revenue was higher or lower from the same quarter last year. So, a lesson to investors following. Management teams will always try and point your attention and highlight certain things about the company they want you to focus on. When there's numbers that are unfavorable, they will not highlight them. They will not share them with you. They will allow you to dig through the details to look for that information before you actually find that information. ChargePoint added new facilities, opening over 500 additional ports signed off by GM for deployment. So this partnership with GM has been a success according to ChargePoint's management team, and this will help the company achieve greater deployment of their electric vehicle chargers. Remember, in the United States, less than 1 out of 10 people are choosing electric vehicles. All right, so to update my recommendation for ChargePoint stock, what do I think about this company today? Well, I have the stock and I upgraded the stock to a hold, as I mentioned about a month ago. And today on August 18th, I updated that recommendation. I still don't think investors should be buying this stock. And in my opinion, the stock is closer to a sell than it is a buy. But I have it rated as a hold because the valuation has gotten to such a low level. Click the link below to watch the full video.